We're currently driving to Texas, so the next couple videos are going to be in the car. But let's talk about the markets. That's what's important here. Fed minutes, probably the most important thing of the day. You know, in the morning, people were talking about England inflation. I don't think that matters to U.S. markets. Fed minutes. The initial reaction was quite dovish. Good, whatever. The market rallied. I said, okay, that's not what we were expecting, but what are we going to do? We didn't sell anything because of it. We didn't go back into the short. But I'm not so convinced it was so dovish. We kind of ended the day right where we were right before. And I still think the next move is lower. I mean, just on that one note, if you look at the weekly chart, it looks like it's getting very, very spiky. Every time the market rallies, it's very quickly and very aggressively sold. And there ends up being quite a big spike in the markets. So we're seeing some spikes out there. Anyways, Fed minutes, hawkish or dovish, which is it? Well, the dovish argument and the dovish interpretation that people had gotten was that the Fed said, oh, we acknowledge the risk of tightening too much and hurting the economy. We don't want to do that. Additionally, it acknowledged the possibility of slowing the pace of rate hikes in the future. Now, here's the thing with that. This is not new. There's nothing new about this. The Fed has talked and said repeatedly that they plan on front-loading the rate hikes. Front-loading the rate hikes. That sounds exactly the same as decreasing the pace of the rate hikes in the future. However, when they hear it that way, the market, for some reason, decided to rally. That's just the way it is. So I'm seeing nothing too surprising in that. What I'm seeing that's hawkish, though, are these notes on commodities, specifically. People are talking about, oh, oil's down, so therefore the market can rally. Well, I don't know how long oil's going to be down. SPR release is about to enter its most intense phase. Oh, SPR, strategic midterm release, I meant. Is about to enter its most intense phase in September and October, and then all of a sudden it's going to vanish. So no need to get too optimistic about that. It's going to be an interesting time, but still a little too early to say that commodities have totally rolled over, and that's what the Fed's saying. So they're going to need to see several consecutive months of declining inflation, and they're not saying they're going to cut rates until inflation's back down to 2%. So maybe we can get there next year. It's definitely a possibility. But let's see what happens. Let's be patient. Even if rates are low, I would think stocks are somewhat expensive here. Rates are higher, and they're probably going to go back up a little bit. They're probably going to have to go back up to 3.5 to 4%. That's just what the Fed funds rate's going to do. Let's keep it simple. Let's see what the Fed's going to do, et cetera, et cetera, et cetera. And let's not try to overcomplicate things. So that's today's video. And until next time, peace out.